Welcome back to Relatable Wisdom, the podcast where everyday people share the quotes that shaped how they see life, giving you a daily dose of perspective to help you navigate your own journey with more clarity and peace. Today's guest is Roger Conrad, known to investors as the Tortoise King. For 4 decades, he's helped working families build wealth through patient, steady investing, proving that sometimes the quietest approach creates the most powerful results. Let's step into Roger's world for a few minutes and hear the wisdom that's guided him through decades of market storms and successes. Tell me your name and what you do.
Okay, my name's Roger Conrad. I am in the investment business, and I try to help people take control of their investment, their financial health, as they might their
Yeah,
physical
okay.
and mental health.
What's your favorite quote, Roger?
My favorite quote, I guess, do it yourself. You get out of you get out as much of something as the effort you put into it, and I think if people do that with investing, their financial health, I
Yeah,
think they'll
the
achieve great
quote
results.
you filled in when you booked the time. It's quite similar to what you just shared. It's no one will what's the word? Something no one will. I just read it just now. I don't know why it escaped me. No one will No one will invest. It's not exactly invest, but something behind the line, like no one will care as much as you do about. Yeah, so yeah, that's the quote. I don't know if you can remember. Yeah,
Absolutely. Right. No one's going to, your doctor doesn't care as much about your physical health as you do. Right. That's pretty simple. Right. But and it's the same thing, with what you do with your money. I mean, you have the ability to spend all your money. You could spend more than the money that you might make. You can put money aside. I mean, they're all choices that we make, uh, but making wiser choices, putting money aside, taking the care uh, to have some money, have it go to work for us, and that's something that we put effort into that no one else is going to put effort into for us. And I think people don't normally think of investing that way. Normally, you think, well, you just turn things over to somebody who knows more than you, and heaven forbid you make any kind of investment decision on your own. But it's really fundamental, I think, to success to do that, to take control of your your financial health, just like you would your physical health, hopefully, and
yeah,
mental health.
yeah. No, uh, from the quote, it's pretty simple what you're saying, but I think the what you're saying now is getting us to redefine what it means for us to care about something, especially in terms of financial care in investments and all that. So, what would you? Because for most persons, they will understand that getting someone to manage and do those things for me is actually it seems like I care. That's why I got someone to do it for me, even though that I might as well not just bother to even get someone to do it for me. So what does it mean to care about your finances, investments, and all that?
Well, I think it first off means, just having a sense of where you are. I mean, not everybody makes a whole lot of money and has, a pension that's paying them. Not everybody's a CEO, right? That's making, you know,
Eh,
what, but most of us do have something. We do make more money than we think. I mean, we do have more money than we think, and so people often say, there's two sides of well, it works for the company, it works for us individually, right? There's two things. There's like the money we make and there's the money we spend. The spending is usually more fun than the making, but sometimes we don't necessarily spend that wisely. So we wind up maybe buying something we don't need, you know. I think everybody does that. Maybe we wind up paying too much for something that we could pay less for. Um, and maybe it's just a matter of, they always say, pay yourself first. That's another quote you could say. And that means basically, hey, let's say I made $10. I'm going to take just being just maybe 50 cents of that every $10 I make. I'm just going to put it over here and just leave it. I'm not going to touch it. Now, maybe I'll have to if something happens to me and you know, I can't, I can't continue to save it. But if I keep doing that over a period of time, then suddenly I'm going to look over here. I'm going to say, hey, I've got this amount of money. So then, you know, and you'd be surprised how you can buy a stock. Somebody can buy some stocks, and these are like, you know, ownership in companies basically, but
Yeah.
that's basically what they are. But they trade a lot, and um, you can buy several stocks for as little as a few $100s. The way it works now, it used to be uh, you had to buy like 100 shares of a stock, right? They're called them round lots, and that's when I started in doing the business, that was it. So you had to have like a fair amount of money to buy individual stocks. But now you have everything's online, everything's done. Uh, you know, you can just do it virtually. You don't even have to have an actual person to buy and sell the stocks for you, but you can buy, one or two shares of a stock. Bottom line, just, less money uh, is required to get this going than people might
Oh,
think.
oh. uh, People have a lot of what do you call it? I don't know where we get this preconceived notions from that. Oh, this is what's because a lot of people when they hear oh investments and nah, that stuff is not for me. Nah. uh,
Yeah, yeah, yeah.
and now that you I think one of the questions a lot of persons ask is would they see someone like you and they ask you, oh, where should I invest my money?
Yeah, I mean, obviously, yeah. So that's what people are going to ask, right?
Yeah,
What's a good investment for me? I just have a little bit, and what am I going to do? So, I think that one place you can, a pretty easy choice is to buy a stock that is paying you to own it, and that is they're paying what's called a dividend um, every quarter, maybe every. In other countries, it's some of it's twice a year, but in the U.S., it's every 3 months or even every month. They're paying you something to own it. So um, a dividend is kind of a outward sign of inner strength for a company. If they're able to pay you consistently some cash over time, that means that it's a pretty sound, solid investment. Just as a general rule. Now, obviously, there's a lot of caveats and so forth, and as you start looking at the individual stocks and um, you know
yeah,
what kind of business they're in, things like that. You know, how much debt do they have? There's a lot of nuances like that, right? But paying a decent dividend, maybe 4 to 5% of the price, um, that's something you can do. And there are companies like, say, Verizon that everybody knows, Verizon Communications. Everybody knows that it's a big wireless phone company. They pay a pretty sizable dividend. It's actually about 7%. So, I mean, that's a company. It's not going anywhere. Um, it's paying you to own it, and it's growing, right? Because
yeah,
everybody's using their cell phone. We gone on to five. We had 4G, now we got 5G, and they're just developing applications for that. Uh, but at some point they'll have, I guess, 6G. So it's a growing business. It's a business everybody needs. So I call that
yeah,
an essential service, and it's paying you a pretty big dividend. So again, that's the kind of thing that you can buy. And then, the whole thing about investing is you're basically making your money work for you. I mean, you're working pretty hard for your money. Most of us do. But where things really start getting fun and better for people and improving their financial health is when their
Yeah.
money starts going to work for them. And, stocks are an easy way to get it done. I mean, having your own business, that's another way to get it done. But,
Yeah.
you're also working really hard, right? Um, Whereas, again, just buying a stock, it's paying you a dividend, it's going up,
Yeah.
your money's going to work for you. And that's really one of the keys to,
Yeah.
financial health, I
Investment
think.
is a very I know there are a lot of nuances when it comes to picking and choosing an investment. Well, I just want you to for us to just look at maybe one or two preconceived notions and limiting beliefs people have, and they carry into investments that leads to making bad investments and financial decisions.
Well, I think one of them, is maybe they are giving too much, setting too much store in what other people say. And particularly maybe somebody that seems really smart or somebody that has a big name investment firm attached behind them. Like, say, somebody gets on TV and you look at them and they say, it says Morgan
Yeah,
Stanley or it says
JP.
Vanguard or it says BlackRock.
Let's take a quick pause. If you're enjoying this conversation and want more thought-provoking ideas straight to your inbox, join the Relatable Wisdom email list. It's free, quick, and filled with bite-sized insights, inspiring quotes, and behind-the-scenes reflections from our guests. Just head to relatablewisdom.com/join. That is relatablewisdom.com/join, or tap the link in the show notes. And hey, subscribing to the podcast helps more than you think, and it's free. So if you haven't already, hit that follow button wherever you're listening. All right, let's get back to the conversation.
And so you're saying, oh, well, this person's smart. They have to be right. But, and they are smart. Okay. So they're successful people, but they're not necessarily going to have a recommendation for
Yeah,
you that is suitable for you. Right. Maybe they're recommending a stock that might work really, maybe it'll go up 100-fold, maybe it'll multiply your money, double, triple, whatever your money, but maybe it might wipe you out as well. Or maybe they're talking about something that everybody has been talking about for a while. So, how, like with, uh, well, anything, right? Anything that gets popular, uh, the price goes up, right? It's all about supply and demand. So stocks actually operate the same way, at least over a shorter period of time, right? If a stock is popular, everybody wants to buy it. So Tesla is probably a pretty good example. It's a really, really volatile stock, and a lot of people have loved over the years. I mean, they've made money in it, so they love it more. But sometimes that stock it goes up a lot, right? And it gets very expensive. And that's often the time to think about, hey, maybe I'll sell my stock and take my profit in it. But I think a lot of people look at what's popular and then they kind of chase after it. And then they wonder what happens when, no one else is paying more for it. And then they wind up, getting burned. And, there's what's called momentum in stocks. And how that works is basically, uh, they're basically um, when a lot of people buy a stock and the stock goes up, there are programs, algorithms that are governing,
yeah,
trillions of dollars, really. And because the stock has gone up, their orders kick in and they automatically buy it. So it's kind of like when an object remains
yeah,
in motion, it tends to remain in motion as a physics, it works that way with stocks, and they run, you know, um, John Maynard Keynes, I think, said that, he said, we're all dead in the long run, right? So, and what he was referring to is that the prevailing trend in the market can keep going, and you might think it's crazy, but it can keep going longer than you think it will. So, that's just, I think if people think of stocks as they would think of uh, another popular item, like, every Christmas there's a popular doll, right? Or a popular toy. And the stores, realize that, right? So the prices are completely jacked up on those toys. Maybe a year later, no one, or even a month or two later, no one
Yeah.
cares. And maybe the price of the thing is that much less. But a lot of people have spent their money on it because, for one reason or another. And there it's usually a nice motivation, right? You want to give your kid a nice toy at Christmas, right? Something like that. But it does work the same way in stocks, and people works the same way in real estate too. When people believe a trend is going to, when a trend stays in motion long enough, like say a stock's going up long enough, uh, the tendency of all of us as people is to
Yeah.
assume it's going to keep going up. Or
Yeah.
if a stock is going down, or it's been underperforming, right? You think, this stock is garbage. So but that's probably the time to think about, buying it, because you want, the way to make money in the market, traditionally, the stock market is, well, you always say buy low and sell high, right? Makes sense. But the only way you do that is by just kind of being willing to, make your own decision. Don't take other people's word for it. And, if there's a prevailing opinion out there, don't necessarily accept it. I mean, you can also, there's a branch of investing, a strategy that I find pretty attractive. It's called contrary investing. And a contrary investor just stakes out positions that are contrary to what, the popular
Yeah.
opinion is, the popular wisdom is. So you actually bet against stocks like Tesla, maybe. That's been a tough one to bet against, but it has gone up and down. So people have made money betting against it. They just had to know when to pull back their bets. But there are many, many other stocks out there that, will go to an extremely high price or go to an extremely low price. The business, and in the low price case, the
Yeah.
business might still be healthy. Maybe it's paying a big dividend, but nobody wants to buy it. So that's when you want to strike. Now, to make those kinds of decisions confidently, you do have to spend a little time thinking about what you're buying, what the company is, and so on. But I think these are decisions that people can make, ordinary people can make. They don't need, with a little bit of education, a little bit of thought. And I guess that's kind of what I've been trying. That's kind of what we try to do in our business. We do have a lot of people who've been with us for a very long time. I think we have a really good retention business. So we give investment advice, and we have what are called, newsletters. They used to be mailed. Now it's all, you look at them online. We have websites and so forth, and we email. But that's kind of the idea. Kind of, we are trying to empower people to make their own decisions. And the people that are the happiest with us generally are people that are comfortable doing that. So, they're using us for ideas, for information, for judgment, experience, and so on.
Yeah.
And that's our kind of little niche of the business. But at the end of the day, it's people
Yeah.
making their
Yeah.
own decisions.
I just want us to touch on something briefly because we're kind of short of time on time, and that is people. Okay, for most of the people right out there, when they make investment because they're not close to the business, they invest in the business just because they want to make money. Of course, everybody wants to make money. What I mean is, if let's say someone
Right.
was a billionaire and I was like, okay, I have this company or this business idea that I want to do and I need investments, right? There are a lot of things you look at. Okay, will this thing make me money? You look at that. Okay, you also look at me that I'm asking for the investment. I'm like, who do I have? Is this guy someone who is a go-getter, or is he just someone who who wants to take my money and do all those things. What I'm saying is that people don't look at the business instead. They're like,
Right.
oh, Tesla stock is the one that's trendy right now. I should buy that stock, right? They're like, okay, what kind of business am I investing? Is this a business that I want to support? Is this a business that I believe in? Because ultimately, stock is basically buying ownership in a business. And what's the use of buying ownership in a business if you don't believe in it 10, 15, 20 years from now?
Yeah, absolutely. I couldn't agree more with you. And in fact, I think that's a really good way for people who are just getting started and they want to look at investments, look at things that way. I mean, do you think this business is actually providing something useful to people? Is it going to be around in 20 years? I mean, I like I think the
Yeah,
telephone companies are likely to be
yeah,
around that way, right? Your electric utilities and so on, right? Uh, but yeah, there's a lot of other companies that maybe they're there, maybe they're not, particularly if they have a product that is, has a shorter shelf life. I mean, technology companies, they're pretty popular today, right? Um, they are very, the larger ones are, they have they're financially stronger than most countries, actually. You say the same thing as, the big oil companies too. So they're kind of on a different level, I guess, than most companies. But um, a small tech company maybe has one product that somebody's talking to you about and saying,
yeah,
hey, this is like our idea. You know, it might be a great idea, but the risk is that, and if you believe in the idea and you take the time to study it, but I mean, that is also, the kind of thing that
yeah,
you might lose everything. I had some friends that did a thing on, they started a company. I actually invested in it, and it was open. It was like an open source software thing. So it looked like a really good plan. In fact, somebody else wound up doing it, but the company we invested in, it went belly up. So, we could write our investment off
yeah,
on taxes, right? But that's not really
yeah.
what you're doing this for,
uh,
right? That kind of thing. So, I mean, in contrast, I mean, I've had a lot of good success with stocks like Verizon and, um, utility stocks, those types of things, um, that, again, around for a long, they're
yeah,
just built to last. Um, and, you know, I think that is, they often talk about like what's kind of a baseline, for your investments. You have there's nothing wrong with, buying those one product companies and taking a shot with them, right? And there's a lot of really interesting people doing a lot of interesting things in a lot of areas, right? But if you can do that with confidence, if you have, most of your money going to work in kind of steadier things, I think. Whereas if you just put it all into something like that, maybe it works and maybe it,
yeah,
maybe
yeah.
it doesn't. Right.
Well, thank you so much, Roger, for sharing some investment advice with us.
Thanks
Yeah,
for having me on
yeah.
the
I
on the
think
program.
my key takeaway from
Good
this
questions.
conversation so far is
Yeah.
that investment is all about care, right? Um, you have to care about the thing you're investing in, not just I want to make big amount of money,
Yeah.
right? Of course, that's nice, but I feel like most persons when they want to invest,
Right.
they like, oh, if I put $50, I could make $1 billion out of this idea, which there's nothing wrong with, but it's just like
Yeah.
it's a
Yeah.
different form of what's the word gambling. Like a lot of persons they come up with that idea, whereas it's
Yeah.
like,
Yeah.
oh,
Sure.
this business I'm putting money on, they can make this. I get to support them and all that. And yeah, yeah, yeah. Thank you.
Yeah. 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 I think that's a pretty good takeaway. And I think, investments like we've been talking
Yeah,
about, I think they're all around us, really. I mean, everybody's got a different life they're living, and you're going to see some things, that I'm not going to see, and I'm going to see some things you're not going to see. But the point is that, kind of the more you think about it, and the more care, right? The more time you take, more effort you put in, you're going to make better choices. You're going to make better decisions. And, again, financial health is just as important as physical and mental health in the long run
Yeah.
for all of us,
Yeah.
as we
Well,
get
once
older,
again, thank you so
particularly.
much. Where can my listeners learn more about you and what you do?
Well, I don't, there's a forum called Substack, Substack. And I have a weekly post on there. It's called Dividends with Roger Conrad. So that's my name, Roger Conrad. And it's Dividends with Roger Conrad. You can go to the Substack app and just type my name in. And that will be a column that you can put your email, and you'll get a column every week. And it doesn't cost anything. We do have products that we charge for, but that's a way you can find out if what I'm saying makes sense and what I provide makes sense, and you can check things out from there. But I think that would be what I'd recommend if you like
Yeah, I'll
what
be
we've been
sure to add
talking
all the
about
links
here.
to the description and the show notes so listeners can click and go directly to the place you just mentioned. Thank you so much, Roger. Yeah,
That's
it's been an
awesome.
absolute
Thank you.
delight chatting with you.
You've been listening to Relatable Wisdom, and I've been your host, Wisdom Okonkwo. You've been listening to the podcast where every story, quote, and insight helps you see life a little differently. If you enjoyed today's episode, follow the show on your favorite podcast app and share it with someone who loved the conversation. For more inspiring voices and timeless wisdom, visit relatablewisdom.com. Until next time, keep living, learning, and collecting wisdom that matters most to you.